Hi, this is Zak Mir with the Bulletin Board Heroes here at Vox Markets for Tuesday, the 5th of April. Starting off with Afritin, which is soaring to new highs here. Saw somebody on Twitter commenting on how beautiful the chart looks, and I suppose any chart that's soaring to new highs looks quite pretty if you're a bull. We've had a few milestones hit in the recent past. We had previously 8 pence as the target here. That was the top of a rising trend channel from February last year, but we managed to consolidate there and then push higher. Current situation is that we're looking for the stock to head up to the top of that rising trend channel from the end of 2020. That's currently pointing at 13 pence plus at its resistance line projection, and hopefully we could see that by the end of next month at the current rate of progress. All the while, we've been keen on this stock off the back of the golden cross that there was at the beginning of February, and also the uptrend line in the RSI window, which has been bounced off several times and it is still very much in place. So hopefully 13 pence here while we hold above 8. Only really back below the 50-day line at 7 pence, really delaying the upside scenario. Seeing some of the COVID plays come back into business. First one today is Abingdon, and here you can see that we managed to break through the 50-day moving average for the first time since November. In the recent past, breaking through the 50-day line has been a sell opportunity, but maybe that's not the case this time. We've got a broadening triangle here, which could, well, at the moment it's pointing up towards 35 pence, which seems to be rather ambitious. That's just above the 200-day moving average at 33 pence. Again, all that looks as though it's a long way away, but a decent weekly close above the 50-day line at 13 pence could at least see the shares head up into the upper teens, which is where they were back in February. And then after that, we can dream of higher progress for the stock. But I suppose if you're a fan of the shares, you would be looking for the shares to hit 35 pence over the next couple of months. Stop loss just below 10 pence seems to be more than sufficient given the recent history of the shares. Switching sectors, and we've got Eco Energy. Here the shares have flipped up through recent neckline resistance around the 0.45 pence area. We've also got the 50-day moving average starting to rise, which is normally a very good sign if it's near the lows, which obviously we are. And we've had that sideways shuffle above the rising 50-day line over recent sessions, so that shows that momentum starting to build on the upside. We already had a bullish divergence line here multi-tested from November, so that basically gave the takeoff around the 0.4 level at the earlier part of last month. And all that's left for us to look to do now is try and anticipate what the upside here may be. Top of that channel from back in December, currently pointing as high as 0.7 pence. That could be seen by the end of next month if we're lucky. But at least the minimum here towards 0.55, 0.54, which is the initial 2022 resistance, and also the 200-day moving average. Only back below 0.4, really delaying the upside scenario. That's where the 50-day moving average is. On to a stock which is looking perky at the moment. We've got a bear trap gap reversal here at GETECH, so we just narrowly went lower than the February low by a fraction and gapped up through the 200-day moving average, then broke the gap high day at 29.5 pence today. That suggests that we should at least head towards the old November resistance at 37 pence. If you're a fan of the shares and looking for a bigger target, then it's probably up towards the 44 or 45 pence area, which is the top of that rising trend channel from back in May. Sorry, a bit of a messy chart here, but basically the mid-40s while we hold above the 200-day moving average around 27. Wouldn't expect this now to go back below 25 pence anyway. So the overall picture above the mid-20s, looking for the mid-40s at GETECH. Onto a stock which had decent news today from memory. Longboat Energy, and here we've gapped up rather nicely. We gapped down back in February, gapped up here now, and already had a resistance line projection waiting, top of that triangle from back in April last year, heading towards 102 pence. That looks rather ambitious at the moment, but at least while we're above the 200-day moving average at 67 pence, we could try and fill some of those gaps up towards the 80s, the 80 to 90 pence area over the next month or so. Only back below that gap, the bottom of the gap from overnight at 62 pence, really delaying the upside scenario. Moving along to Open Orphan, which where the contracts keep coming in, and hopefully that will soon filter through to the share price. Here we can see that the shares just need to get through that 50-day moving average, 15 3/4 pence. If we can do that, then it's up towards the 20 pence area, which was late January, early February resistance for the stock. Hopefully now we've put in decent support around 13 pence for the shares, and it's good to see the RSI just push above the neutral 50 level, which can be the start of a reasonable rally for a stock or market. On to Osirium. Here we've had decent news today, and that has caused the shares to gap up higher. Hopefully it'll be third time lucky, breaking that slightly pesky 9.5 pence resistance area. If we can do that this week, then we could see the shares head back towards 14, 15 pence, which was support on the way down. But need to hold recent support around 6.5 pence in the interim. But hopefully, as I said, with the gap higher today, we will at least retest 9.5 pence over the next few sessions. Surprised to see the daily chart of Predator look so healthy at the moment. We've got that U-shaped bull flag, which has been sort of in place for the last 2-3 months. Good consolidation there. All the while we've been above the 50-day moving average, which is rising, which is really good. And also we closed that gap down around the 11 pence level, above 11 pence, looking for as high as 22 pence over the next 1 to 2 months, or maybe by the end of next month, given that we've spent so long consolidating, and that consolidation wholly above the neckline resistance there at 8 pence, so even more strong by implication. Moving on to another stock which is sort of heading higher in a sharp way. We've got Panther Metals, broke that neckline resistance at 10 pence, above 10 pence. We're looking for the top of that broadening triangle from basically this time last year. That resistance line projection heading towards 16 pence, and we could see that perhaps by the end of next month, or hopefully even sooner, given the way that the shares are moving. We were warned of the imminent turnaround by this bullish divergence line there, so we had lower lows but higher RSI trace, and that happened actually in mid to late February. So we already had one trend line break there, a bit of consolidation, but then back this time, and that W-shaped reversal looks as though it could be very healthy for Panther Metals. On to perhaps the RNS of the day, and maybe the month actually, with Sovereign Metals. Interesting that the shares have been rising very healthily since the middle of last month, which is always pleasant to see. Obviously somebody's got a bit of psychic ability as well in the market. We were flagging the rise here on the basis of the unfilled gaps to the upside, so we've had quite a few of these. The main one there was through the upper 20s, and then another one at the beginning of this month through the 35 pence level. Current situation is that we're rapidly heading towards the previously stated target, 60 pence. That should be seen by the end of the month, and if we're lucky, by the end of the week. Upside value while we hold above our old target that we had at 43 pence, 43, 44 pence. That should now become new support. In fact, it became new support yesterday with yesterday's low. So looking very healthy. And in fact, if you're concerned that this may be the top of the line for Sovereign, it doesn't look like that, because we've got both the 50 and 200-day moving average currently rising into a golden cross. The run up to a golden cross the week or two before it happens, which is roughly where we are at the moment, tends to be the strongest part of the cycle. So there could be a bit more on the upside, or maybe a lot more on the upside, but 60 pence, the technical target there at the top of that February trend channel. Onto a stock which is pleasant to see, has made a decent rebound. We've got Sound Energy here. Here we've had that final test of support. That's basically a triple bottom with July, then October, and then March support, all around 1.2 pence. Current position is that we've broken through February resistance at 1.9 pence. The longer we stay above that, the greater the chance of a move towards the previously drawn resistance line projection from the early part of last year, heading towards 5 pence, and that could be seen over, well, maybe by the end of next month, actually, the current rate of progress, and only really delayed by any break back below the 50-day moving average at 1.7, but that's starting to rise now. We've got the 50-day, the 200-day moving average also rising, so we're going into a golden cross, and that could be quite a decent move. For those who are sort of trained spotters on these matters, there was a warning again that the shares could be rising quite heavily or steeply with that bullish divergence there. So that second lower low for March with a higher RSI. So bullish divergence doing the trick there for Sound Energy. Onto a stock, or the type of stock I don't normally cover, but SourceBio just had an island reversal here. Also bullish divergence there with the lower low for April, but higher for March rather, higher RSI. That bear trap gap reversal suggests that above the old support there from last month at 122, we could be heading back to retest at least the 200-day moving average at £1.42 over the next few weeks, maybe by the end of next month. Stop loss back below the floor of the gap at 114. Finishing off with the stock I think I covered a few days ago. Seems to be responding quite well. Here you can see that the shares have broken that line of resistance and the 50-day moving average, which I think is when I covered the stock the last time, at 2.7 pence. Above that, we're looking towards the top of that broadening triangle at 4.6 pence, that December resistance line to be hit hopefully by the end of this month. That's it from me today. More updates tomorrow.